Hello and welcome to Morningstar. I'm Emma Wall, and joining me today to give his 3 stock picks is Job Curtis, manager of the City of London Trust. Hello, Job.
Morning.
So what's the first stock you'd like to highlight today?
Well, my first stock is a very large global stock. In fact, it's the largest stock by market capitalisation in the London Stock Exchange. It's Royal Dutch Shell, and I think it's been a self-help story here over the last few years. They've reduced their costs very significantly, and they also bought BG at the bottom of the oil bear market, which has been a very good acquisition for them. It's given them high quality assets in Brazil, oil fields in Brazil, as well as enhance their leadership in LNG, which is a fuel of the future. So Shell's offering a 6% yield, slightly over 6%. So, I mean, it's a very big company. It's not going to soar away, but I feel that the 6% yield is safe. And in addition, you know, you can see some re-rating potential, some capital growth on top of that. So for me, it's a stock I'd expect a double-digit return over the next 12 months.
And it is a stock that, despite the fact that the oil price has recovered significantly from the real lows, remains quite out of favour. People are still quite nervous about mining companies, aren't they?
Well, yes, it had a strong move from the lows in 2017, and it's treaded water a bit so far this year. But I think the oil price outlook, as you say, is a lot better. I mean, global growth has been strong, and as all the main oil companies have been cutting back on exploration, it's sort of tightened the market. I mean, it has been increased supply from US shale producers, but it's not, in my opinion, enough to sort of dent quite a positive backdrop for the oil price.
And what's the second stock? The
second stock is more domestic. It's Lloyds Banking, which is obviously now 100% owned in the private sector. The government took a 40% stake during the financial crisis, and it's really rebuilt its capital ratios. It is a leading mortgage and banking group within the UK. It's purely domestic, and it's on about a 4.5% dividend yield, and on its relating its share price to its book value, it's on about 1.2 times, which is quite low really for a profitable domestic bank. I've seen banks in other countries, other jurisdictions, on much higher ratings, and so I think this will be a good dividend stock going forward. It's gone back to what it was originally, and it'll provide some dividend growth on top of that 4.5% yield. And I think there is some re-rating potential.
And as you say, it is very domestically focused. How much then do you consider the domestic economic outlook? Because we do have some clouds on the horizon in the UK. Yes,
I think if you are very fearful of the UK economy, then this is not the right stock. But if you've got a relatively sanguine outlook and think, we're a resilient country and whatever comes, we'll manage, then I think Lloyds, I think it's baked in a lot of pessimism about the domestic economy, and so I think it looks quite interesting from that point of view.
And what's the final stock today?
Well, the final stock is a similar theme, really. It's domestic, and it's our leading or biggest real estate investment trust, which is called Landsec now. It used to be many years known as Land Securities, and it's been around a long time. And it's actually standing on a discount to its net asset value of around 30%, which is unusually high. It's reduced its debts in recent years, so its loan to values in the low 20s, and its average lease length from very blue chip tenants is around 9 years, and it's a mixture of London offices and very high quality shopping in London and shopping centres. So it's very out of favour, the whole real estate sector, or bits of the real estate sector, but it's offering a 4.5% dividend yield, and I think, again, it's not for somebody who's very nervous about the UK economy, but if you're taking a reasonably optimistic view, it's looking at excellent value.
Job, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.